This is Matthew Cratter from Trader University, and today I want to talk about whether you should dump your GBTC, your Grayscale Bitcoin Trust, and use the proceeds to buy one of the new Bitcoin futures ETFs. This is a question I've been getting a lot in my comment section. Matt, what will happen to GBTC? Are the new Bitcoin futures ETFs better than GBTC? Are GBTC retirees in hot water? So I wanted to talk about that today. I should say, though, by way of background, that if you can, don't buy any of these products. Try to buy Bitcoin itself. And at the end of this video, I'll talk exactly about how to do that, how to buy Bitcoin itself, rather than a Bitcoin IOU or paper Bitcoin, as I like to call things like GBTC and Bitcoin ETFs. The basic principle here is not your keys, not your coins. If you hold a fund that holds Bitcoin or holds Bitcoin futures, you're really at one or two removes from Bitcoin itself, and you don't have real control over that Bitcoin. And in addition, you're paying management fees. So I'll talk about that at the end. You can also check out my video from December of 2020 when I was warning people about Bitcoin IOUs like GBTC. And now we have the Bitcoin ETFs coming up. So the first US Bitcoin ETF is going to start trading on Tuesday. It looks like it's the ProShares ETF. And this is not backed by spot or physical, if you want to call it that, Bitcoin. It's backed by Bitcoin futures. If we do just a surface analysis of the two ETFs, this new one is going to trade under the ticker BITO, ProShares Bitcoin Strategy ETF. It charges a 0.95% management fee, annual management fee, so just less than 1%. By contrast, GBTC, which has been around for a while and they used to have a monopoly on these products, they still charge a 2% annual management fee. So it looks like a no-brainer to switch from GBTC to BITO. But this ignores something that's very important that I talked about a couple days ago, in one of last week's videos, and that is the negative carry involved in futures ETFs. Now, this gets a little bit technical. You don't have to follow the details too much, but you should take away the conclusion. This is basically the Bitcoin futures. These are cash settled. They trade on the CME, and this is what will be used presumably to back this futures ETF. Now, what we can see is the futures are in contango, which means that each month is a slightly higher price than the previous month. And the reason this is relevant is when you're running a Bitcoin ETF that's backed by futures, what you will basically be doing is you will be buying futures that are somewhere out here, maybe 2 months out, and then you'll be selling them here to the front month. And you're constantly having to roll your futures because futures expire. And the reason this is a problem for BITO holders is that if you're holding BITO and assuming the Bitcoin futures curve stays the same, stays in contango, which I believe it will. It makes sense that it's always priced a little bit higher each month. If it stays the same, you will lose about 5.8%, somewhere between 6 and 10%. Right now, it's about 9.58%. You'll lose this every year. The ETF will bleed this amount of money. And this is assuming, even if the price of Bitcoin were to stay constant right here at about 62,000, if you hold BITO, you will lose about 9-10% a year. If you were holding Bitcoin itself and the price didn't move for a year, you wouldn't lose anything because it doesn't really cost anything to store your Bitcoin on a hardware wallet. The way I calculate this is I basically take the second month out minus the first month out, divided by the second month out. That's the math that I'm doing right here. So you're basically losing about $500 a month on the roll. And if we extrapolate that, so that's about a little less than 1% move, 1% loss per month. We multiply by 12 months and we end up with 9.58% bleed per year. So when you're comparing the management fees, the BITO has half the management fee, but you are subject to this decay, this 9 or 10% decay, even if the price of Bitcoin doesn't move. If the price of Bitcoin goes down, you could lose obviously more than 9 or 10% a year. So this really, in many ways, it's going to be quite good for the Bitcoin ecosystem. It's going to be quite good for ProShares. They're going to make a lot of money from it. But for holders of BITO, this is really, the more I think about it, really is a garbage product. It's a lot like USO and UCO, which are the crude oil backed or crude oil futures backed ETFs. They have the same problem with the roll the contango role causing negative carry. So anyone who thinks the SEC is really cares about protecting investors, this is the worst possible product they could have approved first. They really should have let one of the spot Bitcoin ETFs come out first. But this is the way it is. And so it's very important to keep this in mind when you're comparing management fees. Now, the problem with GBTC is that it used to trade at a premium to the net asset value. In other words, what the value of the underlying assets are, or the net value, I should say. Used to trade at a premium when it was the only product out there, and it was one of the only ways to gain exposure to Bitcoin in a retirement account, or for institutional investors that couldn't hold Bitcoin itself. That flipped sometime in, call it February or March this year. And since then, GBTC has been trading at a discount to the value of the underlying assets. And that discount has gone anywhere from 0 to call it minus 20%. As of Friday, it was trading at a discount of 15%. Right now, as I'm recording this, it's trading at a discount of approximately 17%. You can get this from the BITO.io website, this calculation. We can see the other closed-end ETFs, the other trusts. I'm sorry, these are all actually trusts. They're all trading at a discount as well. OBDC is and QBTC are trading at discounts. Normally, closed-end funds do trade at a discount to NAV, whether we're looking at stock or bond closed-end funds. So this is quite normal. But the speculation here is that GBTC will convert from a trust structure to an ETF structure. Both of them trade like a stock. You can buy both of them, both BITO or GBTC, in your brokerage account, but the underlying structure is slightly different. Barry Silbert, who's over at Grayscale, basically was saying on Twitter, friends don't let friends buy and hold futures-based ETFs, which I agree with Barry on this. Preston Pish asked him when they're going to convert GBTC to a regular ETF. And Barry Silbert said, stay tuned. We had further news this morning from Jennifer Rosenthal, who is the communications director at Grayscale. So this looks like a pretty legitimate tweet thread, basically saying Grayscale is committed to converting GBTC into an ETF when the SEC has formally expressed their requisite comfort with the underlying Bitcoin market. There were a lot of rumors over the weekend that they were filing today to do this conversion, but it looks to me like this is something that they will wait to do. And later down in the thread, she says, I'm happy to confirm that Grayscale will file for GBTC to be converted into an ETF as soon as there's a clear formal indication from the SEC. What does this mean when the SEC officially says they're comfortable with the current futures ETF, et cetera, et cetera? So what this basically says is they haven't filed. I think personally they may just be buying some time. It's very nice to be collecting a 2% management fee. It's pretty outrageous by Wall Street standards. And so the way the basic incentives work is they're not hugely incented to do this conversion. The SEC has been a little bit leery about cash or spot backed ETFs. And so we don't know when this is going to happen, but the filing hasn't happened yet. So what is the situation? Well, basically we have GBTC will continue to charge a management fee until this conversion. Even after the conversion, they will probably continue to charge a management fee, though they may need to drop their management fee to stay competitive. Again, BITO has this huge negative carry, so maybe when people figure that out, GBTC will continue to be able to charge this sort of management fee. But the basic bet here is that when this conversion happens, this discount will narrow, and it will no longer be trading at a deep discount to NAV. And so what that would mean is you would get a bump up in the price of GBTC, where this discount moves up to, rather than being at minus 17%, maybe it moves up to minus 5 or minus 10%, something like that. One way to look at whether you're buying GBTC here or you own it, at a 17% discount to NAV, it's a little bit like getting your management fee paid by the market for more than 8 years. So 8 years at a 2% management fee is 16%. You're basically allowing the market to pay for that discount, to pay for that management fee if you're a long-term holder. Again, this GBTC discount may widen, it may narrow over the short term, But if you're a long-term holder of GBTC, I would expect it to end up, as I said, much closer to trading 5 to 10% under Bitcoin's price. If everything goes right, if they're able to convert to a spot ETF, theoretically the discount could narrow to zero. I don't think we'll ever see a premium again. There's no reason to pay a premium to Grayscale to own Bitcoin, but we could see this trading very close to zero, so trading right at net asset value. If that happens, if you do the math, if something's traded at a 17% discount and it goes to back to a zero discount, you basically it's equivalent to about a 20% pop from here. So that would be a tailwind to holding GBTC, and that's much better than having this sort of negative carry associated with BITO. The problem is, how long does that take? How long? And it's really anyone's guess when the SEC will warm up to something like this. And Jennifer does sort of hedge her bets here, saying they're very committed to doing this, but of course they're going to wait until the SEC signals that they have a good chance of having it approved. And so the problem here is, while you're waiting for that discount to narrow to zero, you're stuck paying 2% annual fees. To conclude, and again, none of this is investment advice, I personally would not hold either of them, but I see no reason to sell your GBTC and buy BITO simply because of this huge contango bleed. It just doesn't make any sense. And buying GBTC here at this large discount to NAV is not a bad deal. It could widen more. It could go to minus 25%, but I think that's unlikely. I think it's more likely it trends toward zero. In the meantime, you still have to pay that 2% annual fee. If you hold it for just a couple days, I believe that fee gets prorated. So don't think you're, by buying and selling it before December 31st, that you can get out of the fees. Grayscale will still collect their fees. Now, if you want to buy Bitcoin the right way, you can use a company like Coinbase. They're functionally a very good company. They have the wrong philosophy. They promote a lot of garbage coins. Brian Armstrong's a bit of a jerk and has not been good for the Bitcoin ecosystem. If you want to use a company that's a little more friendly to Bitcoin and the Bitcoin ethos, you can use Strike. Jack Mallers is a great guy. You can download Strike on your phone or do it on your computer. There's a Chrome browser app, and you can buy Bitcoin this way. And then you can withdraw the Bitcoin. This will be real Bitcoin. You can withdraw it and hold it on a Trezor hardware wallet. This is the right way to buy Bitcoin and hold it without even having to pay long-term management fees, without having counterparty risk, and being able to basically control your own private keys so that they are, in fact, your own Bitcoin. That's the way, sort of the KYC or the non-anonymous way to do it. For obvious reasons, I can't really post here how to do it, how to buy Bitcoin anonymously or non-KYC. This might not be legal in certain jurisdictions, so you got to check on that. But I do talk about it in my paid courses, which I'll link to below if you're interested. I have currently 4 lectures on how to buy Bitcoin anonymously and without KYC. Again, this is not a way to evade taxes or to break the law. You should be very careful what you do in your local jurisdiction. But part of the Bitcoin ethos is that Bitcoin is pseudonymous, and you should be able to buy and sell it without giving up all your personal details. So in the spirit of Satoshi, I do offer these 4 lectures on how to buy Bitcoin anonymously. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.